Welcome to the Frontline podcast, brought to you in association with the Atla Group.
So today I'm joined by Greg and Chris. Thanks for joining us today, guys.
Nice to see you, Martin.
Thanks, Martin.
Pleasure. We're going to talk resilience asset management, the new to the Isle of Man from your old life. But perhaps before we dig into that, Greg, Chris, perhaps just provide a little bit of background for our listeners on your backgrounds, where you come from.
Thanks, Martin. I'm Greg. I'm a sustainable investment manager, and I've spent my career working as a discretionary investment manager, but always focused on climate, biodiversity, sustainable impact. And since January 2023, I've been managing director of Ravenscroft, Isle of Man, which is part of a group entity, so Pan Island, Guernsey, Jersey, Isle of Man. And about halfway through last year, an opportunity arose, really, or we created an opportunity for a management buyout of the Isle of Man office. So six to 9 months later, here we are as Resilient Asset Management, and joined by Chris, who's been all the way through and with Ravenscroft and the company before that as well.
Yeah. So I mean, I've now been an investment manager. In September this year will be my 30th investment management anniversary, as it were. So started off in London, relocated to the island in 2001. Worked at various local institutions, and as Greg said, was at the forerunner of Ravenscroft, which was WH Ireland International, and then through Ravenscroft, which was August 2020, and now we're on the verge of something new. So it's very exciting.
Yeah, absolutely. So let's dig into that buyout. That's the one thing I think is really there's many interesting aspects, but the challenges, the unknowns that you just don't know at the start of that journey. So let's go back to when that opportunity first came up. Was that a reactive from your side, seeing that maybe they were looking to move on from the Isle of Man, or was that a different way? How did those doors initially open for those conversations?
I can remember exactly when it was, Martin. It was September the 9th, and I was on my way down to Gibraltar for a trip to go and see some clients. And just before that trip, we'd been presented with a scenario at the group level, which essentially gave three options. The first option was to look to sell the Isle of Man office. The second option was to look to buy an investment business with a big AUM. So we looked around the market, and there wasn't really anyone there
on island
that would fit that bill. Or option three was to relocate to Guernsey, which was vetoed by my wife straight away. So I had some time on the trip down to Gibraltar to think about it, and I was sat there reading Ray Dalio's Changing World Order book, and essentially wrote out a business plan on the flight down there. And we've still got that, and that's still it's still the sort of guide, if you like. But the strongest sense was that you can let events take their course, or you can shape events. So decided at that point that we wanted to explore to see whether we could get backing to do an MBO, to see whether Chris was up for it, and just to assess kind of who we'd want to bring in. And very quickly, the concept of the sum of the parts came about, that we thought, well, actually, through our careers, we've worked with people that we know, we trust, that are mature, professional, have experience. And wouldn't it be fantastic if we could all get together and build a new sustainable investment business, which was really the kind of genesis of resilience.
What are those first big pieces you're looking at? Is it the team, the funding? Which pieces kind of do you have to put in place before you go, we've got a course of action we can do here?
I think the business plan would be the first piece. You've got to have that in mind, and know what your purpose and your goals are, and what sort of identity you want. And then I think looking around to see kind of, is it realistic? Who are the key people we need involved? And then of course the funding. Now the funding piece, you just don't know when you start whether there's going to be appetite for it or not. It took us 4 to 6 weeks to really raise the funding, and what we found through through the journey, because we were doing something quite new and innovative, there was lots of additional appeal for participation, and it made us realise how precious an Isle of Man investment licence actually is. There aren't that many of them, particularly those that have got 10-year track record, an experienced manager like Chris at the helm, looking after clients. So that kind of gave us the basis and the foundations to say, actually, we can build a business plan, we can find the financial backing, and we can build the team.
And I think, I mean, it's also the nuances of dealing with a parent as well, because I mean, I'm sure there's a whole library been written on the art of negotiation, but just in terms of not just the price, but just the whole kind of process and the structure and keeping everybody on board through the process as well, which obviously in terms of the regulatory aspect can be lengthy. So, Greg has been incredible just trying to, convey the information to all the parties, and that's just a challenge in itself, isn't it, really?
Yeah, we set out wanting to maintain a good relationship with group that we're moving away from, which we've managed to do. We've actually retained a reciprocal introducers arrangement with them. So, and there are areas we'll work with them in the future. But the other element that was the driver for deciding we want to go down the path of an MBO was that there were changes at the group level. Without going into too much detail on that, effectively Ravenscroft was being acquired by a big private equity backed firm that had a different set of objectives. They wanted to get to a massive AUM number. They're consolidators really across custody, advisory and discretionary. They don't necessarily understand the fiduciary world, the international world that we're in, and their perception of the Isle of Man was, or it's e-gaming and life companies. So at that point we thought, well, we could continue down that path and see where we are in a year's time, but we knew that their window really for getting to their next level was only 3 years. So we sat
I mean,
I don't think that's not for us.
We knew there'd be an echo of the private equity clock just ticking on the wall all the time, and it puts immense pressure on people.
Yeah, no, for sure. Which obviously we see that in the fiduciary space
across so many areas. Yeah.
So when that first conversation happens, Chris, and you're aware there's an opportunity, obviously I'm sure you're thinking clients. What are clients thinking? What was kind of rumbling through your head? Was it here's a great opportunity to maybe be, let's say, slightly more in control of our destiny and that relationship? I mean, I was very reassured in terms of the funding aspect and the kind of depth. And as Greg said, I mean, at some points, you're almost fighting people off, but I was really reassured by the strength of those backers, because I know that instantly clients will think change of control. Hang on a minute, we're going from a kind of £10 billion entity to a smaller vehicle, but it's only going to be smaller on day one, that's for sure, because we've got some great plans. So no, that was the important thing for me, because I'm a boring investment manager, and I want to take the comfort and not, I don't want to sit there winging it. So no, very reassured.
And there were two other bits for me that I could see with Chris as well. One was that there was this gradual erosion of investment decision making that was happening between the Isle of Man office and group, and it became this homogenous, almost you're just a relationship manager rather than making investment decisions. And the other piece as well, that when Ravenscroft had bought the Isle of Man office, they had a big plan to try and integrate the Isle of Man office into group. And I think this is something we often see with acquisitions into particularly multi-jurisdictional acquisitions, that they struggle to integrate both culturally and operationally. And one of the main pieces that they were going to move was the custody piece, but actually they failed to move any of the custody of the assets. So for us doing the MBO, we haven't had to move any clients. They're sat on the same platform. So that piece in terms of continuity for existing clients was really important. And then on the culture piece, I think people often kind of think Guernsey, Jersey, Isle of Man, we're all the same. Actually, there are lots of different cultural elements between the three islands, and quite often there was a lost in translation bit between the Isle of Man and Guernsey. Yeah. So we're looking forward to being in that.
I don't know whether you've ever done the Insights colour wheel, but it was probably pretty clear that we were never going to work, because a lot of Guernsey were on that sort of top right-hand quadrant, the kind of red, and we were always virtually the opposite in terms of the blue green. So it was interesting that there was a lot of.
The first bit of the two there you mentioned about the investment decisions. Does it, I presume, it excites you then to, I wouldn't say take back that control, but have more of that control?
Yeah,
because you're always the one sat in front of clients.
Absolutely, because there's always a challenge where there's a kind of this is whatever people are doing, but if there's a centralized function, and okay, whilst you're feeding into it, there's still only a certain level that you're kind of feeding into it because somebody else has got the control of it, so it can feel slightly detached. So seeing kind of fund people back in the office and dusting off the brain cells on some of those funds, it's good.
And I think two other areas as well around risk and around sustainability. So there was I suppose a tipping point moment for us on a sustainability point where group were looking to allocate to a particular asset, which was quite toxic. I mean, it had Chevron, Exxon, BP, Shell, and my background, Martin. I don't want to see anything like that in a portfolio, and neither did Chris. So when group applied a bit of pressure and said, look, we want to add this asset to the models, we pushed back really and said, look, philosophically, we're not on the same page anymore. And again, that was another kind of indication that we need to take a different path because there's always going to be that misalignment with where we want it to go with the business.
Absolutely. So of the many challenges to this point, name one each, the biggest one to get to this point of that management buyout process.
For me, there are so many different elements to a transaction, and there's no guidebook. So you need to talk to people that have experience. So along from the start of the journey, I've managed to find people that have been through an MBO journey before, that know how to work on all the key relationships, all the key areas where you need to look. Getting that guidance and not feeling like you have to carry it all yourself because you can't. So identify where your weaknesses are and make sure that you bring people in. One of the first people we brought in is a head of ops, Craig Dalton, who we've both worked with formerly. And just knowing that you can move something from your desk onto someone that you trust and that has that experience that's better than you in those middle and back office functions. I think that's a really important piece of the journey.
Yeah.
I mean, from a practical level, and to be fair, Greg has done most of it, but the paperwork and the documentation for, let's face it, we love our business, but we're a tiny business. And that is what has staggered me. It's just incredible. Absolutely incredible. And as Greg said, there is no manual. So to keep on top of all those points. Yeah.
One of the things we're talking about in the business, and so we see it more and more, the mentoring side of it, working with the people externally. So I assume ultimately that help you talk about theirs, just leaning on the Isle of Man community.
Yeah, absolutely. And finding people that have been in a similar journey before and that are there just as that sounding board to be able to talk to, saying, well, actually, if we take this approach, what do we need to be thinking about? There was one particular critical moment with our primary backers where I went away for 3 days, sat with them and we said, look, can we do it? What do we need to do? How do we do it? And it's not just a one and done meeting. It's a continuous kind of regular updates. Are we on the right path? What else should we be looking for? And it is like the basic bits of the regulatory piece. How do we make sure that we communicate well with the FSA? The finance piece. How do we make sure that we're moving from a group world where there were, to be honest, high levels of group costs to a new world where we're far more efficient, but we've also got to have the capacity for the growth that we want to build in there. And then I think making sure that you're always focused on what you want the identity of the business to be. So whilst you're doing all of those kind of operational and admin type bits for the transaction, it's also shaping what you want resilience to look like. So we've built 4 new strategies and really wanted to prove that you can run an investment portfolio fully sustainably. So through every bit of the asset allocation, equity, fixed income, alternatives, even to the cash piece, even to including responsibly sourced gold in a portfolio. So knowing what you want your offering and your services to look like and your addressable markets and how you're going to reach them, that's been the bit that you want to spend all your time on. And it's finding time to do those bits as well as all of the admin you need to for the transaction.
But actually, I mean, that the process has also shown that the power of outsourcing these days as well. I mean, you can be you can leverage yourself so much bigger than you are in reality. So
some examples of that.
I think just from the I mean, the IT was staggering just to start with, and we all came up with a figure we thought we were going to get, and then it was something that was just a lot.
I think you have to test everything from a financial perspective. So we've been given a quote for transitioning the IT system by group of about 25,000 just for the transition phase. We were able to find a provider on the Isle of Man that effectively said, no, we know how to do this. We'll set up your new environment. We'll control the process, and the costs and the ratio effectively is we get 12 users for 50% of the cost of what 6 users would have been if we'd have gone with the status quo. So I think every step of the way, you've got to test the service providers you're going to be working with to make sure you do find the ones that are going to be right for you in your new world.
Yeah. It's probably easy forgotten in the kind of, not chaos, but the chaos of the new business and everything's going on here, that costs can, managing those costs are obviously super important, but can feel like a small part of that process will be important. Just let's start with then identity. So where did the name come from? What's that? What's the message there?
So I think from a sustainability perspective, resilience obviously has it goes more. It goes beyond climate. It goes beyond just biodiversity as a whole philosophy, whole approach. But it also covers risk, which is a key bit as an investment manager. And I think that long-term resilience is what we want to build for clients. I think there is also your kind of own experience of resilience. Everyone's got different types of resilience within them, and it's pulling together a team that combined has greater resilience than us individually, and I think the giving something like it is our identity. Resilience is the identity of the business, and I think there is that element there that we know where we want to get to. We know we want it to be a sustainable approach. We know that it is quite a volatile global economic environment at the moment, and we need that resilience as a business in our portfolios, but also as leaders of the business, that it's not always going to be that kind of smooth path. But I think every bit of experience we've got helps us with planning for the future. And the other big bit as well for us was that we didn't want it to be, investment managers tend to think quarterly, and it's just kind of constant rolling quarters. We wanted it to be long term. So what's the business going to look like in 2040, in 2050? We've sat around with some of our backers a couple of weeks ago, and we were thinking, like, what's the business going to look like in 80 years time? We won't be here managing it, but we want to know that we've got a resilient business that has grown and is still there, and it's focused on sustainable prosperity for clients in the future.
Interesting. So really like the resilience piece. It's especially with, I suppose, we talk around mental well-being and building one's own resilience, and just the same philosophy you're applying to the business, isn't it? And I mean, we as a business have been looking at our 5-10-year vision, so it's quite interesting listening and going way beyond that. I appreciate you can't get into detail of where you'll be in 70 years, but you want it to be.
No, but I mean, but Greg's right, because I mean, you can get so sucked into that kind of short-term reporting cycle, and obviously in recent years we've seen events, whether it's Ukraine or obviously COVID was the big one that has challenged different markets in different ways, and it's trying to see the kind of path through that.
It's interesting you mentioned, because I think obviously we all get quarterly reports, but the reality is when you're investing money, it is long term, isn't it? I'm sure there's not many portfolios you have around for 6 months and then they.
We would take on an investment portfolio for 6 months. And I think we're in that environment now where we're coming out of higher interest rates on cash, where clients are going to have to start thinking about allocating longer term. And I think one of the driving factors for us is we want beneficiaries in the future to be able to look back and say, actually, we made wise investment decisions, or the trustees we're working with, the private clients we're working with, knew that they were appointing a manager that wasn't just thinking quarter to quarter, they were thinking out to the longer term, whether that's aligning portfolios to the Paris Agreement or the Global Biodiversity Framework, or more focused on a social impact side. And it's one of the other big bits a bit that we'll share more as we go live, is assessing sustainability preferences, which if you were sat in Europe, you'd have had to be doing that now since August last year. But the Isle of Man doesn't yet have regulation for sustainability. So we've taken an approach of what you need to do under EU taxonomy and also UK SDR approach. So we've kind of gone for a best practice basis, and actually we're looking forward to rolling that out, because I don't think anyone else has taken that approach here or in that kind of the international islands and enclaves where we tend to operate.
Yeah,
I suspect Martin will be a techno optimist.
Probably. So we've got 4 different personas, Martin.
Okay.
It can be environmentalist, conservationist, social impact focus, or a techno optimist.
Okay.
And actually, it's useful for us because we get a better understanding of clients' objectives, but it also gives us an extra lever at the portfolio level to be able to shape the equity component. So if you are a techno optimist, we'll give you a bit more exposure to those innovators and game changers. If you're a conservationist, we'll give you a bit more exposure to biodiversity in the portfolio. So it's an extra lever for us to be able to tilt portfolios, which is great fun as an investment manager to have that flexibility to tilt and manage them.
We'll get into that side of it a little bit more just in one moment. I just want to reel back to the following the name question, the culture then within the business. I assume most of the team are around, and in theory the following day there's a new label on there, albeit you've obviously got more control within the business. How are you looking forward to that challenge? Do you see a challenge in a big change in culture, and how do you plan on addressing that in the firm?
I think it's happened quite naturally. Is that actually everyone who's involved has been attracted to it because of the identity that we're already creating. So we've had one team member join today, Kim Quirk, who again I worked with previously, and she came on and helped us do some banking for some of our holding companies. And a couple of meetings in, she said, "Can I come and join you?" I was like, "Yes, of course you can, Kim." But it's been done in a very positive way, and the company that's opened the bank accounts for us have been incredibly supportive, and we know there's a long-term relationship we're going to build with them, and they could see straight away that Kim was a round peg for a round hole. And same thing, I don't mind saying that golf is part of our business development strategy. Craig, our head of ops, it was a conversation on a golf course in Peel 6 months ago where we kind of said, look, we need someone to come into this role. What are you up to at the moment? So I think we kind of built the team naturally. I mean, Chris, when I joined, how many did we have under Ravenscroft? There were 5 or 6.
Yeah.
And we sort of saw there was a natural shift happening already because there was a bit of uncertainty about the direction group were taking, that a few of the legacy employees naturally moved away. And at the same time, we've been able to bring in people that want to be part of the resilience team.
Yeah, the dynamic from a kind of distant parent can be very interesting for quite, for a small office. But you're right, you either sit back and say, well, we're happy to be treated that way, or you're actually, maybe frustrations start to bubble. So,
Going back to being in control of your own destiny.
Yeah.
It's like you say, it's not everyone's cup of tea, but when you get that opportunity, I'm sure it's super exciting.
Absolutely.
So just to then come back to the ESG side, obviously it's been within the methodology already. When the ties are being cut, do you see your existing portfolios having a more slant towards that methodology?
So we're very conscious of continuity for existing clients, and our existing portfolios were already on a ESG transition journey, so probably 40% aligned, and didn't have that exposure to any fossil fuels anyhow. So actually, with the new strategies, we're able to just go that step further and make them fully aligned, and across 7 different sustainable themes. And I think we will see clients over time shifting towards the resilient strategies, but I think making sure that existing clients know that there's not massive disruption to the way their portfolio is being managed, and actually having Chris there still heading up the investment desk, it's that continuity that was really, really important for us to make sure.
Because we've been investing thematically anyway. We don't sit down and say, well, we're going to have 5% in Japan or whatever it is. We've been going for those long-term themes. So, as Greg says, we're nearly halfway there anyway.
Is there many in the if you've done research in the market that are, obviously there's a directive now for investments, but is the businesses that have put many around the globe that have put a stake in the ground and said that's all we're doing?
Yeah, I mean, there's a few, but not necessarily internationally. There are in Europe, so you can look at a Triodos. They're probably the leader in that space and have been for decades. There's a company called Castlefield in Manchester that I worked with 20 odd years ago. They've always had a very strong ethical approach. And then more recently, Osmosis in London have taken this approach of excluding fossil fuels, and they've done incredibly well. In the Channel Islands, there's one called Affinity, but they're a trust company as well as an investment business, so they're not quite the same as what we're doing. But no one's really taken internationally the whole asset allocation piece and said, yeah, you can do it across all of the asset classes. And there are some spaces in a portfolio where you know there's a manager that can fill a role or an asset that can fill a role. And we were finding at the group level that they didn't want to look in that direction because they were almost set in their ways. And I think there is a generational shift and a cultural shift happening actually with portfolio managers. And some will never get beyond the kind of 1980s, 1990s approach. And we just wanted to say that actually we want to look to where portfolios should be.
Yeah. And you know, it is a tough backdrop for ESG as well, because you know the last year or so has been tricky for the sector. The higher interest rates have made, you know, quite a lot of those sort of renewable energy type projects not really working in the short term. And the sector's just had a few dints, hasn't it, in terms of people just saying, well, it's a kind of fad, but you know, you only have to look.
Great news for us.
Yeah.
Because I mean, two main bits there. One is that to be sustainable, you don't have to just be exposed to the growthy clean energy assets. They're great when they're working well, but actually allocating towards biodiversity, allocating towards some of the resilient alternatives, they've almost got more of a value approach and lower volatility. And so building out that portfolio so that it's not just high growth. But then actually the backdrop as other managers have looked at those stocks in that sector. So Orsted is a great example. Enphase, SolarEdge, Vestas, they've all come off massively from their highs when there was that kind of momentum trade in ESG stocks, whereas now they're back down at 2020 levels. And we've got long-term conviction in companies like that. So we're quite happy to fill our boots on the right equity mandates with those stocks, because we know in the long term with the energy transition that they're key infrastructure plays and that you need to have that exposure, but it needs to be balanced with more defensive assets across different themes. So things like sustainable agriculture, which doesn't get much attention at all. The biodiversity universe. We've now got the global biodiversity framework since December 22, but there are only 4 or 5 big investment managers that have a biodiversity strategy. And so for us to be able to build that out and treat that as being as important as climate to the whole equation, it gives us a much bigger universe to select from at the portfolio.
And there are real steady tillers in terms of, you know, whether it's the nutrition sector or water and waste. I mean, you know, these are key areas, but they're not, you know, you're not sat there crossing your fingers because the business is burning whatever cash or whatever. And
actually on the we've got one fund that we hold, the Regnan Waste and Water Fund, and again it's that kind of alignment philosophically. So they're coming over later this month, and one of the fund managers said, "Oh, I'm doing the parish this year. Do you want to go out for a training walk?" So I was like, "Great, we'll get you over the slug. We'll go and do a session." And what better way to spend time with a fund manager you're allocating to than out on a walk and actually getting to really understand them and how they tick and what they're thinking about.
Yeah, no, couldn't agree more. The regulation that you touched on, because you know those regulations far more. Just that there's obviously, or from what I understand, there's more and more regulation around having to invest in that way. Just talk a bit about that cycle from maybe when that started to where you see that ending. That will there be a requirement that it's always just a percentage, or that everyone has to, or where do you?
Yeah, so I think the regulation has evolved in lots of different ways. And probably, I mean, you can go back to the late 1980s, early 1990s, when you had a very voluntary type of approach, and people would apply exclusion criteria on particular sectors. That then leapt forward post Paris Agreement, and I mean, Paris Agreement was signed in December 2015, so we're almost a decade on from that now. But lots of the targets and goals that were set then for 2030, we're now only sort of 5 years, one cycle away from that point in time. So over that time, the regulation has developed across Europe, across the US, the UK, although they've been a little bit of a laggard.
Why?
I think they wanted to see. They wanted to be leaders, and I think in some ways they have been leaders. But on the regulation side, Europe definitely moved first with the EU taxonomy, and that almost set the pace. And I think if you go back pre-pandemic, and we look at something called the shared socio-economic pathways, which are different kind of outlooks of models of where the world might be under different temperature rise forecasts. And if you go back pre-pandemic, you had Europe, the UK, US, and even China pretty much all on the same page from a legislation perspective under the Paris Agreement, because it was fairly fresh. Everyone had signed up to it. Europe then got their legislation in place. US obviously made a fast start, and then we had the Trump era, so they came out of the Paris Agreement, and then they came back in again. And then China sort of almost treated it as a bit of a race, particularly on the clean energy side. So it is still quite fragmented, the regulation globally, but you see the approach that Europe's taken. You get other jurisdictions like Singapore, which is pretty much cut and paste the SFDR kind of the labeling of different funds. So SFDR 9 is sort of a dark green fund, 8 is kind of sustainably aligned and getting there, if you like, and 6 is the sort of the traditional, more toxic approach. That kind of filtered out around the globe in terms of an investment approach. But then in the UK, they didn't want to necessarily copycat the whole thing, so their SDR regulation came out last year, which is slightly different, where you're looking at labeling funds in 4 different ways, but with a minimum threshold of 70% that can be clearly identified as aligning to that methodology. So our approach has been to say, right, we'll take that bit of the EU approach and only allocate to SFDR 9 and a couple of 8s on the fixed income side, and then also apply the UK approach of SDR and make sure we've got more than 70% threshold being met in terms of overall allocation. I think the regulation going forward, so under the shared socioeconomic pathways, pre-pandemic, SSP2 was probably the middle of the road pathway. From a global perspective we were on. I think we've now shifted to SSP3, which is a rocky road pathway, where you expect to see more protectionism, more focus on kind of energy and food security within regions rather than globally, more inequalities, those sorts of things. So we're moving to a different backdrop and seeing different jurisdictions take a different regulatory and legislative approach.
And unfortunately, we have seen some of the rollback in terms of the timelines that we've seen from different governments as well, haven't we?
Yeah. And then the one thing for resilience is we don't want to be political, but you can see what's happening at a policy level in different jurisdictions. And
it would be frustrating.
We see countries that have made strong nationally determined contribution commitments, but then fudging it and saying, actually, no, we've already done this, and now we're going to go and do North Sea oil again.
Okay.
And then you see that at the corporate level as well. And we did a podcast probably 4 years ago around one of the oil majors and saying, well, actually, can they change? Can they transition or not? And you saw signs there'd be big investments into renewables, but then they would they wouldn't really change their identity and their culture. So my view is that the transition piece is we're at that point in the energy transition now where we will see some challenges and some volatility, but actually investment managers, that's quite a good thing for us because it also means there's opportunities within that transition.
One of the things we've talked about off camera, Greg, before is around, so let's bring back domestically. Firm wants to reduce this is moving maybe slightly away from the business, but the ESG wants to improve its footprint. And trying to reduce its plastics, maybe doing a little bit of recycling, but to set some benchmarks, how does a company start that cycle and that journey?
Yeah, I think the Isle of Man is ahead compared to lots of jurisdictions, and most companies now we talk to have their own sustainability committee that's reporting into the board, that will have a budget that sets its goals and targets, knows its baseline numbers from an office perspective, and I think most companies are now kind of doing all of those positive elements, but they're not necessarily tackling the hard to abate emissions that the company has, which as either asset owners, investment managers or advisors, life companies as well, is the carbon intensity of the assets that they're managing or owning. I think tackling that is the next phase, and there are lots of different ways to try and approach it. I think doing a carbon review, so you really know what exposure you've got within your business. And then I think finding different ways, and for us it was, well, we wanted to make a long-term commitment to the Isle of Man, so we decided that we'd set aside 10% of portfolio management fees for conservation on the island, which kind of roots us in sustainability on the island. And again, it's one of those elements of not using carbon credits to offset emissions of the business, but finding something that we can do locally, that we can walk through, that clients can see that there is that long-term commitment. It doesn't mean that we're going to stop traveling for business, but it means we're going to measure what we're doing and what our carbon footprint is for traveling, knowing that we're doing more here to not just offset it, but to make a net positive impact.
Yeah. It's interesting, that net positive. I think often the human nature goes, you do something good here and then you naturally go, but you talk about flying, but you're still flying here, but that, the world you still have to turn and do business. So it's then getting that balance of the offsets, isn't it? Which is an interesting conversation that people like to dig into.
I think for other businesses as well on the island, I think it's the collaboration piece. And we are seeing more, and we're seeing more the public-private partnership between government and businesses. But I think there's still, we're at a phase where almost seeing the companies that are really committed to it and what they're doing now. And I think there is still that opportunity for companies in different sectors to participate. So we know on the sort of the legal side, the accountancy side, the life company side, pension side, that kind of leaders are emerging. And I think that over the next couple of years, we'll actually see those leaders getting together to say, look, how do we showcase the Isle of Man as an environment, as the UNESCO biosphere, where kind of finance and sustainability can sit together, and that's the whole sustainable prosperity piece for us. We want to demonstrate that you can run a profitable business that makes a net positive impact whilst looking after clients.
Yeah. So the idea, just to finish off, one statement to say to, I suppose, listeners, intermediaries, clients, what would that be for your new business? Come and chat.
Come and chat. I think don't let events just take their course. Right? If you, as a business owner, we wanted to be able to shape those events, but I think as a private client or as a trustee, it's the same thing. And often you'll be doing something. You'll be you might be tidying up plastic off the beaches. You might be living a circular economy kind of model, but still feel like it's a drop in the ocean and you're not making an impact. I think the next stage for a lot of people is looking to what exposure they've got within their portfolios or portfolios they have influence over. If you've got an Isle of Man pension, the likelihood is you've still got a Shell and a BP in your top 10. So that would be my invitation, I suppose, to intermediaries and to private clients to come and see us, chat through that, and assess your sustainability preferences. If you've not done that before, it's a really interesting process to go through, because it makes you think about, what do you actually prioritize? Where do you want your capital to go? Do you want to see a greater social impact and a just transition, or are you really just focused on conservation piece, or actually do you think technology is going to be the bit that gets us there? And so that's the bit. Come and explore it with us. I think that's the invitation.
I think, frankly, I'm optimistic, because look how far we've already come in terms of, whether it is the sustainability reporting. I mean, we're not sat here saying that everything's perfect now, but we can clearly see the journey we're on, and it is just wider than the kind of green side as well. So you've seen how far the kind of diversity angle has come as well. So it's just thinking the whole area And basically every day we can get better.
Indeed. Good way to finish. Thank you for your time, guys.
Brilliant.
Good luck with the new business. Not that you'll need it, because I'm sure it's in very good hands.
Thank you.
Thank you, Martin.
Cheers.
Thank you for listening, everyone.